Oh my Alibaba. So I'm currently not at home, but how can I miss such an important day with my fellow Baba bag holders? So of course, the full-fledged analysis will come in due time when I'm equipped with all my tools. But if not, this is really just my very quick summary and quick thoughts and opinions around Alibaba's recent earnings. So I think I came across this very interesting quote recently. I think it goes along the lines where there are decades where nothing happens, and there are weeks where decades happen. And I think specifically for investors that are interested in the basket of Chinese equities, we are really bombarded, like I really mean bombarded, by a slew of different negative headlines, negative sentiments, and negative news around China, Chinese equities, the Chinese economy, the Chinese politics, etc., etc. You name it, we have it. And I think the most important key focus on why the market is reacting so positively on Baba's earnings really is around these three words. And this is my humble opinion, of course. These three words is China back? I think this is really the core question. There are many investors that are skeptical, that are still holding their investments into the Chinese space, and there are also back holders like us that invested in very early on, started averaging down, and we have like that blind trust and blind optimism. And sometimes my friends ask me, hey, how sure are you that you can trust Xi Jinping? How sure are you that you can trust his administration? How sure are you that the economy will rebound? I think that is really an answer that you can, I guess that's only a question that you can find the answer for yourself. But really, if you really look at it from a chronological point of view, there are a whole slew of things that you can look forward to. The property crisis that started in 2020 because the Chinese government started tightening with the three red line policy. And then there is this supposed bank run on the provincial level. And then there are things like, people start talking about the population collapse. By 2100, China's population will essentially get halved. And you talk about youth unemployment being the highest. I don't know why this bunch of economists, of this bunch of investors suddenly got so interested in the youth unemployment figures, not China unemployment rate as a whole, but just youth unemployment. And then you have the China-Taiwan issue, the trade tension, some sanctions on chips, sanctions on semiconductors, sanctions on rare earth materials. And on top of that, you layer in the Chinese economic miracle that is faltering. And you have things like, deflation, CPI and PPI numbers going negative for like 5-6 months in a row. And then export imports are like down 10 double digits, by the way, year on year. And then you have a lot of millionaires escaping China. And then you just stack all these stories and narratives on each other, and then you get this doom and gloom picture. And nobody's gonna invest in China anymore. And on top of that, for Alibaba specifically, you throw in competitors. ByteDance is gonna start killing Alibaba. Everybody is gonna eat everybody's lunch. And I don't know where the wealth is gonna accrue. It just seems like Alibaba is a goner. But I think just some top line numbers, just so you know, for those of you who actually haven't read. So I think Alibaba's earnings specifically in terms of revenue top line, over the last 4 quarters, it was range bound between negative point something percent all the way to, I think the max was around 3-4%. So that was probably great pessimism. And I did say, at least in terms of my modeling and in terms of how I'm looking at the entire scenario, we are experiencing some sort of cyclicality, and the Chinese economy needed some time to kind of boost back up. Of course, I think at the earlier start of the year, because we understand that the COVID-0 policy stance that was changed actually started, I guess, right around the start of this year or the end of last year, where they just finished their elections, air quotes elections. So back then, everybody was betting on the China recovery. Then everybody started plowing money, and then you see the huge recovery in terms of Alibaba share price to 120. And then suddenly all the numbers started going haywire. Like I said, PPI, CPI, export figures, all the earnings figures, everything went downhill. So people started rotating money out again. And then now they say that, the growth story, the recovery story is cancelled. The funny thing is, in the US, the recession is cancelled. In China, the growth recovery is cancelled. So that was essentially the context. And you can see that based on the last 4 quarter top line growth rates, you can see, yes, Alibaba was fairly disappointing. But I think this quarter, it did show some sign of optimism and also some sign of recovery. Top line actually grew 14%. And I think the most important segment for many investors is really the Taobao and Tmall section, because it's the most profitable. It's essentially feeding all the other lines of other businesses. And in order for them to fire on all cylinders, the Taobao Tmall section has to print money. And in this case, they started pumping up revenue growth again. It's at 12%. International commerce was actually up 41%. We don't really have the breakdown, but I do think that at least in the Southeast Asia space, Lazada is still kind of lackluster compared to Shopee. And cloud, 4%. So I think for many Baba investors, at least for long-time Baba investors, this is the two main segments. China core commerce, which is Taobao and Tmall, and also cloud. So cloud is still fairly disappointing, but I did say in my previous video that cloud required some time to kind of pump it back up, essentially because it follows the ebbs and flows of the economy. And if Chinese economy is not really good, you have to think of it from the perspective where cloud is really enterprise facing, while the e-commerce part is customer facing. And we know that in terms of the customer facing part, a lot of the Chinese people today, they are hoarding cash. They are very pessimistic of the future. But it does seem like we are seeing some signs of recovery, at least for now. So that's that. In terms of some of the bottom line numbers, yes, income suddenly got prompted up by a large extent, plus 70%. Then if you actually reverse out the share-based compensation, it's actually up 43%. And you can see that there's this very interesting line where SBC, share-based compensation, actually dropped by a large extent. So I'll spend some time to talk about it after going through the transcript and stuff. So that's in the later part of the video. So essentially, when you really look at and focus on just the Taobao and Tmall section, I think I just wanted to read you some of the statements that was quoted from a management team. So in terms of the core commerce segment, CMR, which is customer management revenue, is actually up 10% year on year. So I do believe that I think I did share, for those of you who follow me on Twitter, I shared one of the tweet threads the other time. They were saying that, CMR was one of the most important figures, and at least for the last 2 years, CMR was on a decline. And it seems like, hey, CMR is suddenly back. I'm not too sure why. We need more investigation, and we need to see that whether is it sustainable or not. But at least it's kind of upticking back in the right direction. And on top of that, they did kind of provide some comments, and they did say that it's primarily due to the merchants' willingness to invest in advertising again. And there is a successful 618 event, which happened in June, so which coincides in this quarter. And surprise, surprise, I think for those of you who follow me, loyal viewers, in the previous video, I did say that Alibaba is technically, or at least in substance, Alibaba is an advertising company. Yes, they feel like an Amazon of China, but really e-commerce is just a means to an end. The real substance of Alibaba, how they kind of govern themselves, they are working like an advertising company. And as long as the economy is not very good, they are going to follow the cyclicality of the economy. So I do look forward to whether the growth recovery is coming, and we really need to give it 2 to 4 more quarters to see whether this kind of growth is sustainable or not. But essentially, I think in terms of the valuations of Alibaba today, you can really see it as a value pick. There are a lot of famous value investors that came in, or self-proclaimed value investors in the YouTube, Twitter space coming in. But when Alibaba start ramping up their growth again, maybe it becomes a growth investing kind of stock or investment vehicle. So that's that. Then in terms of Taobao actually grew daily active users by 6.5% year on year. Taobao with, I've forgotten off the top of my head, but I think it's close to 1 billion active users. Is it 1 billion, or I think slightly less than that? I think it's the combined numbers in the Alibaba ecosystem that's 1 billion. For those of you who actually have the numbers at the top of your head, feel free to leave in the comment section down below as well. And another point, 88 VIP, which is like basically the Amazon Prime. It's a subscription service. They actually grew by double digits. So that's basically some of the top line numbers that you need to know in terms of the core commerce business. So that's the most important business, like I said. It needs to feed the cash flow back into the entire business. So I think just to really drive home the point, many people were saying when Alibaba was going down, because like I said, a lot of people like to tag the narrative to the stock price. So if the stock price is going down, the business is bad. When the stock price is going up, the business is good. And everybody was saying that, ByteDance is going to be the Alibaba killer. Some are even saying that ByteDance is going to be the Tencent killer. So I look forward to Tencent's upcoming earnings report as well. But I think you really need to kind of dig deeper into understanding the different modes of the different economic modes of the different businesses and why they're going to continue thriving. That's that. I'm not going to explain further. We can explore further about ByteDance, but it's very hard because they're not a publicly listed company. I can't really compare their numbers, but just leave it at the back of your mind, because a lot of these are just storytelling unless they can back it up with numbers. So that's that. I think last but not least, just wanted to touch a little bit in terms of the numbers. A lot of people will be kind of tempted to get into Alibaba because Alibaba is cheap. And there's very huge discussion points around many social media platforms about whether Alibaba is a value trap or not. So I think when you really just look at the numbers within the last 4 to 8 quarters, in order for Alibaba to be a value trap, or for any investments to be a value trap, two things probably need to happen. Number one, valuations probably will remain cheap. And number two, really the fundamentals have to start eroding. And by erosion, I mean by maybe top line revenue growth start slowing down, maybe going into the negative territory. And more importantly, they're unable to keep up in terms of their buybacks or in terms of generating free cash flow. But at least in this most recent quarter, they're kind of reversing that trend and reversing that mean. So maybe people are thinking that, hey, maybe there is an opportunity for Baba to kind of revert back again. So just some quick numbers. At least for March for 2023, because they have that very weird financial year. For that previous financial year that we just ended 3 months ago, they generated around a $25 billion free cash flow. And if you take today's market cap after this recent rally, I think they're trading around a $250 billion market cap. So that's essentially a 10% free cash flow yield. So assuming that Alibaba doesn't grow their free cash flow out in the next 10 years at a 10% free cash flow yield, if the management returns that 10% to us, we're going to buy back the entire company within 10 years. So that's 10%. For those of you who are interested for a comparison, you want to do it on a relative basis, go and Google all your different big tech companies of the US. I think they range between 2 to 3% max. So let's assume that Baba is able to trade much closer, but still with that so-called China discount at 5%. 5% is probably sometimes even 2x the valuation cheaper, like half time cheaper, because 2.5% versus 5%. Alibaba is able to double easily from here. And then there's another question. Is it really we are just punting for kind of a mean reversion? Not really. If Baba is able to continue growing bottom line free cash flow, the free cash flow yield goes back to 5%. That's a double whammy. Double whammy in a good way, where free cash flow yield or the earnings and fundamentals of the company continue increasing and the market assign a more fair multiple in that case. And you're really looking at a double to triple from a $100 base, which is after this rally. So of course, this is not financial advice. I'm not telling you to buy. I've personally I have stopped accumulating for quite some time because of the position sizing. But honestly, people keep asking, oh, is Baba still a buy now? Of course, I still remain hopeful, and my average price will be higher than those of you that just started buying. But of course, I understand that people are still skeptical. They're saying that, oh, this is just 1 quarter of goodness and 1 quarter of outperformance. We'll see. I think I still remain hopeful, and I still remain optimistic. Of course, we can continue on with that whole youth unemployment, population demise, population collapse, and whatnot. Numbers don't lie, and honestly, if you can triangulate with many of the other companies with China exposure, you'll get what I mean, for those of you who actually follow them. So I think that's largely it. And one last thing, in terms of the cash position Alibaba has. So Alibaba just reported that currently, in the latest quarter, in the June quarter, they have $80 billion USD on their balance sheet. If you net it out, net out their short-term liabilities and all the debts and stuff like that, they have $58 billion USD. They are at a $250 billion market cap today. You less off 58 billion, that's around 190 billion. So you do the math. I think it doesn't take a math genius to kind of figure out what kind of multiple or what kind of business you're buying. But really now, the biggest contention point here is not really Alibaba. It's not really whether Alibaba is cheap or not. It's whether you think Alibaba is a quality company or not. And you have to do your due diligence on that and build your own conviction. But I think just based on 1 quarter ago, comparing the previous quarter to the current quarter, their cash reserve increased by 5%. I don't know at what rate they're going to keep building up this cash reserve, how they're going to are they going to buy back shares? Are they going to issue dividends or whatnot? Or it's just a war chest? Maybe it's going to be a donation for the CCP. Who knows? But that's that. You do the own math. You triangulate your own data points. I'm just here to provide my perspective. And yeah, it's not a buy or sell alert. Anyway, so you guys have fun with the earnings report. I'm not too sure whether it's going to be sustainable or not. But that said, as long as Alibaba continues in that positive direction and continue delivering, I think the market will recognize the quality of the company and the valuation will have to revert sooner or later. So with that, I'll see you in the next video, but more importantly, I'll finally see you on the moon. Goodbye!